Welcome to the Crypto Compliance Podcast by Gatenox.
Pawel Kuskowski, welcome in Crypto Compliance by Gatenox, where compliance experts and practitioners are meeting to talk about practical issues and current market events. We promote the highest compliance standards in crypto, bring interesting topics, and talk about practical issues. I would ask you to subscribe to our channel, leave your comment, and share it. Let's together promote compliance culture in crypto and Web3. Please also check our website, gatenox.com. Gatenox is the fastest network and tailored corporate KYC solution. With Gatenox, you can onboard corporate clients by working in a trusted and compliant ecosystem with Web3 capabilities. In this episode, I had the pleasure to speak with Haydn Jones. Haydn is the global lead for blockchain and cryptocurrency at Kroll. Kroll is a global leader in assets recovery and forensic analysis. Haydn has over 20 years of experience in sales, operation, transformation, covering financial services, technology, and most recently, digital assets. Haydn also acts as an expert witness in criminal and civil matters as they relate to digital assets. He qualified as a barrister and he is co-author of the Executive Guide to Blockchain. During today's session, we spoke about security, that security is necessary in the crypto world, what change in assets recovery, how crypto could play its role in improving efficiency in the 27 trillion financial industry, and where is the future of crypto. Thank you. Hi, Haydn. How are you?
I'm good, Pawel. Nice to see you again, mate.
Likewise. Haydn, it's been a while, since we know each other, right? So I think it's good to disclose this part. I think you've been one of the person who at the beginning of my crypto journey, I met you. And at that time, I think you believe you were in PwC or even before PwC. And that's something that, was very interesting for me because, we have someone in PwC responsible for crypto and blockchain, which at that time was very innovative, thing. Right now, you are global lead for blockchain and crypto in Kroll, which I know from my previous, company quite well, CoinFirm, blockchain analytics company. And this is something so tell me, what's your scope? Because, Kroll is definitely connected with fraud investigation, all this stuff. But what's your scope?
Well, with 6,500 people globally, we've got about 300 people within the firm who are crypto capable. And of that, we've got about 60 people who I've described as specialists in their field of expertise. One of the great things about Kroll is that we're used to risk. We deal with risk. That's what we do. Situational risk, people risk, positional risk, country risk. Attractions about working with them, being part of the organization is the fact that, when crypto turned up, risk is something that's in the DNA. So in terms of dealing with investigations and dealing with, tricky situations with people who are at risk or at large, or we've got theft, risk is something that's in Kroll's DNA. So Kroll look at crypto as a risk vector, as a threat vector, basically. And you've got the tools, the understanding, the capability to navigate through it. So I'm really proud to be part of our organization and really proud proud of the capabilities and the way we sort of extended our services out into the crypto community and some of the great relationships that we've got. So it's good. We're a force to be reckoned with, and we're proud to be part of making the industry better.
And you are based in London, right? But
correct, yeah.
Global, let's say, overview and global remit. But what's happening at the moment in the UK is actually quite interesting for our space. And I know that you are heavily involved in this area. So tell me, what's your view on what's happening? Is it going the right direction or not?
Yeah, I would say. Obviously, we've got. I think it's useful to actually look at the UK relative to Europe and relative to the US as a sort of northern hemisphere jurisdictions. UK. I think the most important thing is we've just closed. So Treasury, His Majesty's Treasury, has just closed the consultation on what will effectively be a regulatory framework for crypto, which is brilliant. The Treasury Select Committee have come out this week, so and they've sort of highlighted that their view is that crypto can be treated in the same way that gambling can be treated. I think that's an interesting observation. I would argue that if we look at Europe by way of comparison, I mean, the Europeans have just spent 2 years working through a very large sort of 400-500 page document on markets and crypto assets. So I think I'd argue that for crypto to have a future and relevance in terms of traditional finance, in terms of creating new forms of security, new forms of cross-border payments, I'd argue that we need something slightly more sophisticated than putting a gambling wrap around it. So I think that's important, because for me, the future of this technology, it's not necessarily about. I mean, Bitcoin's very interesting, but it's actually, for me, it's about creating new forms of securities that settle, new forms of payment infrastructure that settle. So you've got UK, and we just closed our consultation. So various consultation responses have gone into Treasury, describing what we think the future should look like. So it'll probably take another 12 to 18 months for Parliament to be in a place to pass, formulate an act, and then it's probably another 12 to 18 months for that then to be implemented. Most likely we'll have an election in between now and then, so we need to bear that political uncertainty in mind. The Europeans, I think last week, the Europeans have approved MiCA or MiCA, markets in crypto assets, which is very positive. So that's a fully passportable, multi-dimensional piece of crypto regulation, which I think is great for the Europeans. I mean, we're challenged slightly because we still need to establish passporting capability, but I think that's linked to a more broader financial services question that we've got to establish passporting capability across into Europe. And then you have the US, and I think that the US they've taken a very, very different approach, because effectively it's regulation by enforcement. The challenge with the US is lots of sort of fragmentation state by state, and then you've got federal level as well. Obviously, you have the CFTC and you also have the SEC, which have differing views on what this technology is all about. I'd argue to a certain extent, probably a little bit behind in terms of and I think that's a political challenge that they've yet to really nail. So state by state, they're enforcing particular projects. Interestingly, I think there was an interesting piece that came out in relation to Florida, in relation to the way that a central bank issued or a Fed reserve for Florida, the way they would issue digital currency and how that would track how people were using it in relation to freedom and liberty and such like, and effectively they're sort of banning the issuance of a digital currency in Florida because of libertarian concerns there. So, and again, I think more broadly, you've got to see that against the backdrop of what the central banks are doing from a digital currency perspective. So the UK is in the process of hiring 30 or so people, Bank of England, for a state-issued digital currency, and obviously you've got Europeans as well. So it's a very, very interesting moment in time, and we have to put that in the context. Bitcoin, best performing asset of Q1 2023, although we have seen a bit of a pullback in the market. Yeah, absolutely, better than gold.
All right, that's interesting. But coming back to the UK, there's a lot of discussion whether gambling, treating crypto as gambling is actually good or bad. And there's there's tax perspective, there is, let's say, I think that major, how I read this, major, let's say, concern from the industry is not to be put in the same bucket as gambling. Right, as when we as industry is trying to avoid this kind of connection, right? It's not gambling, it's this technology, it's future of whatever, right? Finance, internet, whatever, and then we are put in the gambling category. So, but at the same time, you have tax advantages. You have kind of replicable to some extent until we get something better, the easy framework, right?
Well, I think it's an interesting observation, and I think there is some potential merit in there, because you've got 24,000 cryptocurrencies, okay?
Yeah.
I'm sure as you work your way through, you're going to find pockets of digital currencies that actually they are, if you put money on them, it's exactly the same sort of thing as putting money on a horse race or something like that.
Yeah.
But it's I think it's just too broad. And I think that, the challenge that we all face is how do you deal with 24,000 cryptocurrencies, because you just can't work your way. So I think, I think it's a bit too broad brush of an approach. I mean, if I look at Bitcoin, I can take all of the technical indicators, so things like moving average, convergence, divergence, relative strength indicators, and I can trade Bitcoin in the same way that I can trade FX, okay, or equity. So all of those tools exist, but because the capital that's then allocated declines exponentially. So as the market liquidity gets thinner and thinner, I think it's arguable, yes, for some of them it becomes a bit more random in nature in terms of the way that they perform. But I come back to, I mean, let's think about the future potential of the technology. I think 24,000 cryptocurrencies is very interesting, but actually for me, the future is about properly regulated securities that look like debt and equity, that settle 24/7, that trade 24/7, and it takes friction out of the economy. It takes friction out of our the process of raising capital on a primary capital markets basis, and then obviously they trade on secondary markets. So that for me is the big attraction.
Okay, I mean, this is exactly what I wanted to ask you next. So where do you see, I mean, crypto and blockchain application in the broader financial segment?
So the opportunity exists. I mean, we can prove this. I mean, Ethereum demonstrates this because it's codable shared ledger technology that allows us to create new forms of securities. The challenge with, and I may stand up to some criticism in making this observation, but the challenge with Ethereum is that if Ethereum failed, the states wouldn't necessarily step in to save it. Okay. Yeah. Which some people argue is an advantage, but I mean, if we're going to start, if we look at the size of crypto, it's about $1 trillion or so in terms of value. If you look at total assets under management, it's about $120 trillion. Okay. So if we're going
how did you come to this number?
It's research on the internet. It's research on the internet. So
and it's like anyone who is involved and the projects which are being built on crypto.
Yeah, so assets under management. So these are traditional assets under debt and equity. And if we're going to put $120 trillion worth of assets, traditional assets onto blockchain technology, it needs to be robust. Now, if you look at the way we settle security settlement in the United Kingdom, and actually the way we move payments as well, everything pyramids up to our central bank. Okay, so you've got the Bank of England. There's a core piece of market infrastructure right in the middle of the central bank, which is called real-time gross settlement. So whether it's a wholesale payment, whether it's a retail payment, or whether it's a payment related to the settlement of securities, it all goes through real-time gross settlement. And the way real-time RTGS works, real-time gross settlement works, is that you collateralize value. So you put debt, you put a bond, you put a gilt on the table with the Bank of England, and that buys you headroom in terms of the payments that you're going to make. Okay, and what that means is that if I'm buying securities from you, okay, you're going to have to, I'm going to have to pay you. But what we do is we have the central bank there as the arbitrator to make sure we have securities and we have the debt, and we're going to swap them over because they go through RTGS, and we've got Euroclear and we've got Crest in there. So we make sure that credit risk is removed. So we have that emanation of the state, which ensures that happens safely and securely. We can do the same sort of thing with Ethereum because we have a ledger that's got value on it, and we can code it in such a way that value moves against value. But it's not an emanation of the state, okay? Which I think somehow we've got to bridge that. And I actually think, interestingly, the bridge will be central bank issued digital currency. And then what we can do, we can use that to create programmable stable coins that actually we can then use to settle securities. You've got interesting companies like Archax, for example. Companies like real-time gross settlement as well, actually, is a company that's out there that's looking to solve these problems. But But I came out of investment banks. I used to sit on equities trading floor. So I've seen what the primary guys do, in terms of issuance, and the way the secondary guys, trade these instruments. But there's lots of friction in the back office because the trades fail. Okay, you send a payment out, you don't get any securities in. You move the securities, you don't get any money for it. You see, there's still all that, that frictional cost there that we can take out some of this infrastructure.
And I think I heard one very interesting opinion that US will not be moving into the securities tokens because this will impact negatively the whole Nasdaq, the traditional, let's say, capital market. But at the same time, UK and this is what I heard, that potentially there's there's a government looking into kind of re-engaging capital market through stable coins, through crypto related to securities, all this stuff, and effectively kind of jumping over this hurdle of, okay, our market is effectively not working, right? Because like currently nobody wants to do the listing on the London Stock Exchange, right? So that is this, do you think is there something like this type of plan potentially considered?
I mean that's a very broad question. I think that and I think we stray into sort of a political world, if you like, because I think and I wouldn't want to advance any strong views on some of the broader geopolitical issues. But I mean, UK is a prosperous country. I think that we have to find a way now through where we are post Brexit. I think politically we've had challenges over the last sort of 4 or 5 years, which I think have been distracting. And obviously, there's other bigger geopolitical challenges there as well. And we've also had to deal with COVID as well, you see, as has every country. And I think that we're still trying to navigate a way through, and we have to be. There are many challenging issues that we have to face at the moment. The politicians have got a big inbox that's very, very high. So I'd say Britain is still very much open for business in terms of what we can do, and even today the government have announced investments in the chip sector, so to build that out. So but we have to face competition from the US and the Europeans as well, you see. So we have to continue to work hard to sell what we've got in terms of our wonderful capability.
Yeah. And in terms of, your work in Kroll, and obviously Kroll is responsible for, assets recovery. And that's my, let's say, experience. We've done a couple of cases historically with Kroll, and it was mostly, initial, let's say, work on the recovering crypto assets across the world, stolen, like hacked, ransomwares, all this different stuff, right? And so from this perspective, and your work in PwC, you saw a lot of projects, now Kroll. What do you think is the biggest risk in terms of, for crypto businesses and coming from crypto business into like real world
data, and actually having an aggregated view of where the addresses have been tainted, because we're operating on a public ledger, and it's having a real-time view of where the most polluted, if you like, the most tainted addresses sit, and where we've got evidence of a transaction that's been linked to that address. And we can split that because obviously we've got Bitcoin, which is pseudonymous, so we rely on attribution data there. But I come back. It's about bringing lots of data sets together so that we have a real-time view of what the threat geography looks like. So how tainted is the Bitcoin ledger, if you like. So there's only ever going to be 21 million Bitcoin. Of that 21 million, what percentage have in any way touched an address that's been associated with criminal activity? Yeah. And then in terms of linkages out from Bitcoin into other currencies, Again, where are those channels? Where are those conduits? Is that a particularly hot one that's over there that's been linked off to something like a Monero or some other enhanced anonymity coins? So it's about data. It's about aggregating data across lots of different sources, and then having a real-time dashboard in terms of where the greatest levels of concern lie.
Do you think we get to the point when there will be no clean Bitcoin? Because
it's an interesting question.
A matter of time, right?
Yeah, I mean it's a very interesting question because there's only going to be 21 million Bitcoin.
Yeah,
and it's divisible down to a finite level. So it should be possible in time, once they've all been mined and they've all been broken down to the lowest level, the smallest possible level. It should be possible to say that one's 100% clean. It's never touched anything. And that should attract higher value relative to something else, which we can see, well, actually but some of it came from a hack, and some of it was online gambling, and some of it was, it was stolen, and we can see that was the person that was prosecuted associated with that because he physically grabbed somebody's phone. So I think it's fascinating technology. It's very different to what we have with conventional money.
Yeah, but do you think? I mean, do you think that it's going to be easier to recover, stolen crypto assets over time? Because I think it is one of the there's a couple of myths, and a couple of problems which are critical, right? And one of them is if you know how to steal crypto, and you know how to launder crypto, and you know how to transfer this crypto in the right way, it's almost impossible for you to be caught, right? And I mean, this is at least my view until recently, right? And it's something which is, kind of, is there any change which you see on your end, which is kind of impacting this, and that it's easier to recover right now? And so there's one, and I think UK is, frankly speaking, is big because property injunction, which you can do. It's one of the best jurisdictions to recover assets, right?
Yeah.
And then you have the, Tulip. I don't know if you saw this case, but Tulip Trading Limited versus Van der Laan.
The 5G duty.
That's
imposed upon the coders.
Because, so let me just dig out this. What's the first time that developers of Bitcoin networks might own fiduciary duties to Bitcoin owners. Yeah,
I think that's fascinating. I think there's two things in there. I think that, again, unfortunately, I come back to what I said earlier. It's about data. I mean, I see these pig butchering cases, and they're very, very sad indeed.
What's the pig
butchering? So it's, man meets woman, woman meets man.
Okay.
Man convinces woman to, go and buy some Ethereum. And then he says, well, I need you to buy some more, baby. How are you feeling today? You look wonderful. And then before you know it, there's $50,000 worth of Ethereum that's been sent to some anonymous guy who's got a fake picture. And then,
by the way, this is incredible that you call this.
I know it's not a great term, and we've been trying to come up with something that is slightly more friendly to pigs, to be honest with you. Because, but unfortunately, that's the term that's being used, and but they're very sad. And the thing is, and they just keep going after them, just cutting them off, and it's dreadful. And what's even worse is that these cases generate masses of data in a very short period of time. I mean, I've seen a case, thousands of pages, right? And I say to them, and I think that was about $600,000 worth of loss there. And I said, look, I can guarantee you that the answer's in there somewhere. But to find it is probably, the analysis and the research that you've got to do. You're into some probably $70,000 to $80,000 before you cut it. And unfortunately, these people don't have the funds to do that. You see, so and then there's also patents as well. You see, because there's only a small number of actors that are actually perpetrating these crimes, and they reinvent themselves. So it's understanding that. So for me, it's about taking the data and then mining the data, and then it's going to be structured, it's going to be unstructured, and then looking for the patterns in the data, and actually looking for the linguistic patterns. So there's forensic linguists out there, and what they do is they look for patterns. They can look at the patterns in the language that's been used, and they can use that in the same way that ChatGPT works, and they will look for weights that then point to illicit activity. Actually, the probability of this conversation being something that's going to do me harm is high. So we can mine that data for the linguistic patterns, and we can use that as almost like you and I having a conversation, and it's a great conversation, but we can also have like a little needle.
All right.
That say, right, actually, this conversation's, this is getting a bit dodgy. Pawel started calling me babe, and he's sending me pictures of himself going out for a run in the morning, and I'm like going, okay. So, and then he's asking me for crypto. You see,
all right.
So you've got that data challenge, I think, is massive. But then you've got the interesting case of tulip trading, which is utterly fascinating. So, as Court of Appeal judgment, Mr. Justice Burse, who's an incredibly sharp mind in the legal community here in the United Kingdom. And I think what's fascinating is that normal software, if I coded normal software, I've got a duty of care and a contractual duty to deliver the software properly. The thing with Bitcoin is that it's got value in it. There is, and we can debate about whether we think that's right, whether it has value or not. But as far as I'm concerned, we put energy in and we create a digital event, so there's value in there.
Yeah.
And the term fiduciary refers to looking after things of value. Okay, so you have a trust-like relationship. So I'm holding something of value. So whether it's this stone, for example, it's been entrusted with me, but this stone has value.
Yeah.
So the term fiduciary is about creating a legal framework that imposes a different type of responsibility on the individual as compared to a contractual duty or a tortious-like duty, so a duty of care. We'll see. I mean, they've been granted leave to appeal, so it will go back to the High Court. The judgment there was that I think Mr. Justice Burse used the term it's arguable, so it'll be reheard. And I think the world's legal community are watching that case with great interest because so I saw an American lawyer discuss this earlier this week, and he described, well, you Brits, you just kind of make it up, you create these fiduciary duties out of nowhere. But that may well be the case. But this is what the common law is all about, and the law has to grow and breathe and flex to accommodate these new forms of technology.
Yeah, and I think if this goes the way it's currently like painted, which is like, okay, you kind of influence the protocol, or you can influence the protocol, and you kind of in charge of protocol one way or another, right? And there's the one way or another is actually pretty complicated picture, because then even if you have like you are in Uniswap and you have Uni token and this is governance token and you can influence decision. Next step could be that because you are, you have governance, let's say tokens, you have fiduciary duty, and everything which happens wrong on Uniswap, it's actually your responsibility. And then, from the legal perspective, you have, and I'm not a lawyer, but this is my understanding, is that you can go after almost every individual person, which is kind of holding, governance token for the whole amount which you lost, which is crazy, right? Which I think, is just, it's so risky for the industry.
Yeah, but I'd argue, we live in a society, okay? There are rules that have to govern our society, okay? I take, great comfort in the fact that when I get in a plane, it's not going to fall out of the sky because it's a highly regulated activity. I get comfort from being able to turn on the tap and have water which is clean. I can use electricity, which is safe. And if we have communities of people that are creating things that look and behave like money, that we allege are a store of value, then and that are impinging upon society, it seems sensible to apply the same sort of rules to them, because we can't have a halfway house. We can't say, well, I'm not, we're only going to regulate half the airlines, for example, because these things are really important to us. Money is really important. People do bad things with money, and it doesn't matter whether it's crypto or whether it's cash.
And people do bad things to get money, right?
Exactly right.
Yeah.
So we've got to put safety rails around this and make sure that people are protected.
Yeah, and I think interestingly, I had this discussion with business Bitcoin Satoshi Vision team, right? And it's interesting because we went back to the conversation which we had initially, like back in 2017, 18, and the Bitcoin versus the original. I mean, the current BTC Bitcoin versus original white paper, right? And funny enough, one of the key aspects is the assets recovery, right? It's actually assets recovery is written in the Bitcoin white paper, but it should be possible, right? It should be doable, and that would solve a lot of problems, which we both understand how it would be looking if we have, let's say, okay, this is the token which you can move, no problem at all. But if we have clear indication that there is, crime committed, right, and we can obviously put some framework around, what's the definition of crime, whether we need to have initial or court decision, or initial indication. But you can freeze these assets, and this assets should be not accessible, right? And this is for in the original Bitcoin white paper. And then if we have right now Bitcoin, which is like, oh, you cannot stop it, right? You cannot stop it. You cannot do anything with this. And whatever crime you commit, that's free flow. And I don't think it's actually sustainable. And it looks like we're going in the direction that it's not sustainable.
I would. It's programmable technology. So the way we use it is really limited by the imaginations of those who've created it, and I leave that open as a question for people to ponder, because the case is with the courts, and let's see what the courts find.
Yeah, and the other side of thinking of this is like all decentralized finance, and the whole discussion around decentralized finance. What is decentralized? When we can draw the line, and where is actually the discussion. Okay, well, we cannot influence this protocol, and we cannot do this and that because it's decentralized. So.
Well, again, I come back to the point I made. Money is important in society. Okay, and if you choose to use money that's not connected, it's not regulated, it's not backed, it's not supported by the state in any way, well, you've got to face those risks that it will fail, and you also have to face the risk that you might not be able to interact with society properly. Okay, because we need guardrails in the same way that we need guardrails around our planes. If people don't, necessarily believe in the need for the guardrails, well, that's their choice. But the consequences flow from that. And I come back to where we started. I mean, super interesting technology. My ambition in life has been to get it working from a securities perspective, and support the industry, but help the industry mature in such a way that we're actually addressing some of these these big problems in the way that securities settle, payments settle in a manner that's hygienic and it's risk-free and it's properly regulated. DeFi is super interesting, and I mean, I think you because effectively what you're taking is one class of asset, and then you lock it and you get another class of asset, and that's actually very similar to what a bank does, because if I put the deeds into my house, into a bank, I can get a mortgage for it. Okay, so I can use this DeFi technology to transform the way banks operate, because one class of asset goes in, another class of asset goes out. But the challenge then becomes one in which, well, what's the role of the state? Okay, because our banks are all highly regulated, and they're all highly regulated for a reason, because if they fail, they will cause great damage to society. So we have to find a way of, taking this clever DeFi technology, and then, we've got lots of very big banks that have got lots of IT systems, and somehow bringing the two together so that we can create more efficient payment infrastructure and banking type infrastructure, which would be great, because our economy is 2.7 trillion. If 10% of that, if 5%, 5%, 10% of that is frictional costs through payments, and contracts and banking infrastructure. That's money that we can take out of that that cost, and we can reinvest it in things like hospitals and rail infrastructure.
Yeah, and I think this is why the industry is so excited with, or kind of tempted with the UK as jurisdiction, right? Because from looking outside the UK is we know that law in the UK is working, and it's not necessarily government who is looking at the how things are done, but it's more contractual law, court which is in place, all this stuff. So you can you have this technology framework, and if you connect this with the legal framework, contractual framework, I think this is something that UK is kind of underplaying, and looking from outside the UK, it's almost like there's so few jurisdiction when you can say, and that's kind of I don't know if the US is in this way. Probably not, but it's in the UK you have the feeling that if something is not prohibited, you can do it, but you may be challenged in the court. There's like case law, and it can be new case law, but it's very kind of secure in this way in comparison with other jurisdictions.
I mean, I kind of agree with what you said, but you can do it provided you do no harm. Okay, and I think if we get to place, the English language is very, very flexible in terms of the way that it can describe ideas. The legal commission paper that was issued at the end of last year is fascinating. That's a 600-page document which describes some of the reforms that we've actually got to make to the law that allow us to create these new forms of securities. So that's out there for consideration now, and they talk about the creation of almost like a new form of legal object. So we have things in possession, we have things in action. So I can own something physical, I can have an action against somebody, and then the idea in the law commission paper is that we have something which is things as it relates. We're creating legal substance around what is effectively data, and then that introduces other ideas. Then that allows us then to have proper digital securities that are registered on a distributed ledger. I think it's one of the observations I made. It sort of struck me six years ago when I first got into this. There are very few global regulators in the world. If we think about something like radio, you've got the International Telecommunications Union, which stands alone as one of the few global regulators. When radio was created by Marconi, the states of the world, the countries of the world realized how important radio was. And they thought this radio thing, it's very difficult to regulate because it's cross-border, because I can send a signal from here to New Zealand and it crosses multiple different countries. So it's borderless, and in some ways it's a bit like blockchain technology. So the states of the world came together and they formulated the International Telecommunications Union, and the idea there was to create standards so that we organise the way we use the radio bands, you see, and that's been very successful in terms of making sure that everybody knows what channels you've got allocated and what you're allowed to transmit on certain channels, and this is for satellites, and this is for shipping, this is for emergency services, and that's very well organised. I think the challenge with digital asset technology is that it becomes political very quickly. It becomes political, and
because it's money. I mean, it's
exactly right.
Yeah,
exactly right. And we may see geopolitical bifurcation, split, in terms of the way we approach this. But unfortunately, I come back to if you look at the legislators, you look at the government, they've got an intro which is so high with all of the other different issues that they've got to deal with. So we have to play our part in terms of moving this debate forward, which is why we're having this conversation.
So how do you see the future of crypto? I mean, you mentioned, I think what I heard is you mentioned let's say traditional securities to be kind of the next phase for crypto. I see this as a couple of things. NFT, I think it's going to be playing incredible role, especially with the kind of real assets, real life assets. And also, I think, that's something that we play in Gatenox. This is our game in Gatenox. But the companies, the legal entities will be entering into crypto world, which is completely different gameplay in terms of trust, security, compliance, all this different stuff. So what do you think is going to be happening in crypto next couple?
Well, there's 24,000 answers to that on the basis there's 24,000 cryptocurrencies. But so I think if we simplify it, I think that I'm comfortable to argue the case for Bitcoin, because I think Bitcoin for me is very similar to gold. Okay, it's difficult gold is difficult to create. Bitcoin is difficult to create. Gold has got some interesting attributes. Bitcoin's got some interesting attributes. Volatility will subside over time in the same way. If you look at the price action of gold, interestingly, over the last 150 years, it's very similar to the price action of Bitcoin over the last 14 years. Okay, so volatility will subside. So I think Bitcoin's got some interesting attributes. The energy footprint, yes, okay. Well, everything uses energy. I mean, all of the religious festivals we have out there, they use energy. Shoes use energy, for example. So we have to see that on a relative basis. So I think we can maintain the case for Bitcoin. I think stable coins will become, they need to be treated in exactly the same way that a bank, it's the same purpose, same regulation.
Yeah.
So they need to be treated exactly the same way a bank is treated. Bank-like services, they need to be properly audited, properly regulated, proper AML, KYC perimeter around them, properly reserved in terms of the capital liquidity on the balance sheets. But then we have the utility tokens. So these are cryptos that come with purpose, and they're effectively software. It's software that moves money, and it gives you access to things. And I think that we've got to see that in the context of the metaverse and Web3. So Web3 is about owning value and being able to self-sovereign identify yourself. So I have responsibility for identifying who I am, and that I can create my own form of value. But that needs to be regulated, because again, if I'm going to be interacting with people, I need to do so in a manner which we can trust. And then we can extend some of those ideas. I mean, I've always been fascinated by the idea that if I take an ice cream manufacturer I make my ice cream, it's got vanilla and it's got some sugar and it's got some cream, it's got some milk in there, it's got some eggs in there. For me, those inputs are very similar to what we see in the Bitcoin process, because I have little bits of Bitcoin that go into a transaction, and then we merge them together to create an output, which is consolidated bits of Bitcoin effectively, unless it's this freshly mined Bitcoin that's going in there. But that's very similar to what happens in the ice cream process, because we put the ingredients in and we get blocks of ice cream that come out the other end. And I can use this technology to trace where my vanilla has come from. Because if I send, as you well know, if I send you a Bitcoin, we can see where it's come from. So if I send you a block of ice cream, I can see where the vanilla's come from. I can see where the sugar has come from. I can see where the eggs have come from. I can see where the milk has come from, you see. So this traceability, I think, is hugely fascinating in an ESG context, but also, in terms of actually automating the way, you think about the ice cream manufacturer. Well, she's got, 4 or 5 supply chains that sit before, all the way through to the vanilla plants and all the way through to the cows that create the milk that creates the cream. And we can create layers of automated contracts that sit between those supply chain layers that automate that process. So as a consumer, I can pick up my ice cream and I can actually look at the provenance, and I can be confident that I'm having something which has got the carbon footprint. It's been properly dealt with. You see.
But do you see actually this happening? The supply chain, blockchain supply chain connection.
Theoretically, it's possible.
Yeah,
theoretically, it's possible. I think the challenge is there's classic organizations are incredibly complex in terms of the IT infrastructure, the way it's all put together, and there's a lot of risk. Your average CIO or CTO will be sort of, mid 50s, has been working in business 30 or so years. They'll have maybe, 5,000 people, 10,000 people working for them, something like that, and a big budget, a big IT budget. This is still unproven at big enterprise scale. And then the other challenge is that it's not just about me as someone who makes ice cream. I've got to engage all the people back to the farm.
Yeah.
So there's a big structural challenge there. But we, 30 or so years ago, people had little to no awareness of the internet. We didn't have such things as phones, mobile phones. We almost need a chat GPT type moment that will then cause people to sort of really stand up and go, you know what, this actually is really quite clever technology. Somebody has just put their entire manufacturing process on a state, backed distributed ledger, such that I can see, if I take my block of ice cream, I can see where it's come from. And it can be delivered cheaper, quicker than, the metrics around that, can be delivered cheaper, quicker than traditional technology. So, but it's going to take time. And we're really at the foothills of where we are. Radio's 120 years old or so, thereabouts. There was lots of, different ideas when in the first 20, 30 years. And then now you and I are standing here communicating with great ease, and there's probably multiple transmitters, receivers in our rooms that's, making this work. And all the way, I think all the steps between you and I in terms of that radio telecommunication linkage that we've got. So it's going to take time, but this is why I get up every morning, because I like to have difficult, exciting problems like this to work out.
Yeah, I think when I look at this, what's happening in the crypto market, the most successful at the moment, for some reason, are stablecoins, right? For some reason, and I think that the need for stablecoin, and the interesting part is why there's nothing like in pound, which is successful in the international, or in euro. It's simply the US payment. Maybe it's because, to bypass, US, let's say banking system requirements. But it's actually, comparable to the number of transactions Visa, MasterCard, right? at the moment. So that's something which is kind of like quietly, ramping up. Even if there is if you would think, that you would put in USDT, into Tether, any money, me and you, I wouldn't put, right? But funny enough, at some point I put, right? Because it's actually working for me. It's I used to do USDC transaction, but USDT as well, right?
Yeah.
So that's something which is, from my perspective, it's real application, and the current, the most sustainable application of crypto into, let's say, broader world. And I think, the problem right now, which we see, is that we look at the crypto from the perspective of, northern stratosphere, as opposed to the world, And when you think about in Argentina, half of the freelancers right now are receiving money in crypto, right? It's because it's more secure. That there's no transaction costs related to pesos. It's actually this very interesting play at the moment with stablecoins.
Yeah, but unfortunately, I'm going to put my financial crime hat on here now.
Yeah.
Same sort of activity, same sort of regulation. People do bad things with money, and unfortunately, there's only two things certain in life: death and taxes. And we live in a society, and we've got to play by the same rules. if you want to benefit from being able to fly around the world, well, you've got to be able to sort of make sure that you can pay your taxes, and that we can see what you're doing with your money, from a financial crime perspective, and make sure you're not doing bad things. So we're still, as I said, we're still very much in the foothills of adoption, and we started off with regulatory frameworks, and MiCA covers that. UK will get there. The US have got it already. They do it by enforcement, don't they? So they've already enforced, several interesting, well-known stable coins for reasons that were right and proper. So we'll get there. We'll get to a place where actually we've got the right hygiene perimeters, the right sort of safety rails we've erected around this.
How long it's going to take, you think?
I think I'll be long gone dead. But no, no. I mean, 20, maybe 15 years, 10, 15 years.
Really?
I think.
That's long perspective.
Yeah, I mean, it's another sort of, for UK, US, Europe regulations to bite, and maybe another 3 to 5 years. And then, it's another 3 to 5 years to really, we'll have to go through another cycle of adoption and change. So you probably, 10, 15 years, but I'll be fishing by then, I'm sure. I'll be standing by a river, enjoying the trout and the salmon and all that, whatever.
All right, Haydn, thank you very much for your time.
Pleasure.
It's been
Absolute
excellent.
Pleasure.
Crypto Compliance brought to you by Gatenox.